am O'Neill and Company from the year 2003 till 2009. It's Wednesday, September 18th, 2024. It's my birthday. If you'd like to wish me a happy birthday, please do so.
Happy
I'm
birthday.
Thank you, Steve. Happy to spend my birthday with you guys. And it's 7 p.m. on the West Coast. Welcome to the IBD virtual meetup. Thank you for supporting my meetings. As usual, all the information you will hear here tonight is for educational purposes only. We do not recommend any buys or sells. All names discussed are ideas for you to further research. I will go over about 45 slides first, then we'll bring Steve to give us his views on the markets, stock ideas, etc. In the meantime, you can post your questions on the chat and we will answer them as they present. I can also be followed on Twitter at Alex Marenco 1, known as X now. Typically, I will post an actionable stock chart daily, plus all about virtual meetups related. All right, let's start with the general markets here. And we have the stock action today, the market pulse, indexes, volatile. We had a whipsaw day where we saw highs, intraday highs for the S&P, equally weighted, and the S&P 500 market cap weighted. And also we reverse, and I'll show you that on the charts on the next slide. Current outlook, still exposure at 60 to 80%. That was initiated on September 12th, Thursday last week. They went from 60 to 80. We were at 40 to 60 on to 9/11. Then we'll upgrade it, and this is the maximum exposure we had since last time we met. As far as distribution days, we had 6 on the NASDAQ and 4 on the S&P 500. We had 2 distribution days in the last 2 days, so we had to talk about that. We're going to go deeper into it. Also, we have year-to-date 15 changes in market outlook and 2 follow-through days. Also, this is week number 38 of trading. Stock action today from the 250 growth from IBD, 224 stocks were up on volume and down on volumes, 165 stocks, breaking out 8 stocks and near buying point 9 stocks. So let's start with general markets indicators here. This is the S&P 500. We have year today up almost 18% on the S&P 500. And get my pen here. There we go. Also, the P/E ratio right now is at 20. The accumulation distribution is a C minus. The action today was flat, minus 0.3% after a big reversal. The RSP is up 12%. That's equally weighted. It made a new high today, all-time high, and reverse, and still up 12% for the year. That means the market had broadened. There's a lot more participation, meaning small caps are participating, mid caps. So that's a good sign. And the Russell 2000 is up 11% for the year. Remember, it was flagging pretty much all year long until the last couple of months. Now it's starting to catch up. As far as the technical picture, on the S&P 500, we are above the 50-day moving average, but today's and yesterday's action, as you can see, is a stalling action yesterday. We closed at the lower end of the range, and volume was picking up from the day before. And today we had a reversal to the downside. We were making new highs pretty much intraday, and then we reverse, close at the low end of the range on higher volume. So those are little warning signs for now. But again, we have to take it a day at a time. Here's your internals. Your advanced decline line is still trending up on the S&P 500. Like I said, the leadership has broadened, got more participation in the market. As far as what the Fed said was a little bit dovish, their comments. They don't see signs of weaker economy ahead. Typically, when they start cutting rates, by the way, they cut 50 basis points. when they cut rates, usually that's good for markets. It's also a good sign. It's a bad sign of for the economy. It means the economy is weak. So we'll see how it plays out. Like I said, we take the market a day at a time. We don't try to predict here. So we'll see how it goes. But today's action for now, would not say it's a very positive move. Moving on, here's the New York Stock Exchange momentum and daily stock action. In New York, we had 217 52-week highs and 5 52-week lows. Advancing was 44% and declining was 53%. As far as the top 10 IBD industries or subsectors, if you will, number one right now is oil, gas, royalty trust, up 51% almost. Actually, food and dairy products is number one, 65%. Second will be oil, gas, royalty trust, 51%. That's number 8. And number 2 group is specialty alloys and steel, up 49%, and that's number 2. So those are the subsectors. As far as today's action on the S&P 500, we have energy was up 0.25% and 0.02 on the communication services. Those were the only 2 sectors up today. We have the bottom sectors, the ones that were the worst: utilities, 0.75%, information technology, 0.5%, and consumer staples, about 0.5% as well. So those are all, except the technology, staples, and utilities are interest rate sensitive. So when rates go down, typically those things go down as well. So we'll see how it continues. All right, here's a percentage of S&P 500 stocks above key moving averages. Last time when we met 2 weeks ago above the 20-day, we were up 70%, about the same right now. Above the 50 was 70% also. Right now, a bit better, 75%. And above the 200-day was 73%, and now it's almost 76%. So things got overall a little better when you see more stocks above the 50-day moving average. That's a good sign for the markets. Here we have the NASDAQ composite, and here we're going to look at the technical action in a second. Here we go. Today, we were down 0.3%, pretty much the same as the S&P 500. Year to date, we're up 17%. Unlike the S&P 500, we're down 6% of the highs that were made here back in July, I believe. As far as the accumulation distribution, it's a D. That's not good. And year to date, the QQQE, the equally weighted NASDAQ 100, is up 6%. That's because the Magnificent Seven have been holding up the NASDAQ composite, since it's a market cap weighted, a little bit better. So, but still not much participation on the other end on the QQQE. As far as the ARKK, by Kathy Woods, that's the innovation fund. That's where all the growth names, the high octane names are. She's 7% down for the year. The FFTY is the IBD 50 as an average. It's up 13%. Still not better than the NASDAQ. And the 0MUTI, which is the IBD Mutual Fund Index, is up 13% for the year. We looked at that fund, at that index in a minute. As far as the technical picture here, the NASDAQ's not looking as good as the S&P 500. Made a high in July. Then we have this pullback in August. We rally into these highs that we made here, I believe it was the end of August. And then we have this first week of September that was pretty ugly. And now we're recovering just barely above the 50-day moving average. So far we're hanging above it. But again, we had 2 distribution days in the last 2 days. And stalling day yesterday, and a reversal to the downside today on higher volume. So that's to be paid attention to. And here's the 80 line. The breadth on the Nasdaq is declining pretty much since it made the high here. So that's not good. Now, as long as the September lows are in place and we don't take those out, in my opinion, the trend is still up. So just keep an eye on that 16,468 number. If we take that out on a weekly basis, especially, that trend could be going lower, and that means we might be putting a top on the Nasdaq. As far as the pull-call ratio trading volumes, we're at 0.74. It's been kind of tame since we had that spike in the early week of September. So that actually was in August. So since we had that shakeout in August and not much has happened there. So all in all, the Nasdaq is a weaker index. So we got to pay attention to that since it's our leading index. Here's the Nasdaq momentum and daily stock action. Today we had 166 52-week highs and 58 new 52-week lows. Advancing was 41% and decliners were 56%. Okay, here's the IBD Mutual Fund Index I was talking about. It's up about 12.5% for the year. These are the best growth funds picked by William O'Neill and Company. And we have 3 funds that are up 24% or more for the year. JP Morgan, actually, Fidelity Contra is still number 1, 28% for the year. You can look at the symbol FCNTX and go punch it in and see what their holdings are. Typically, look at the top 10 holdings. I think lately they've been buying Duolingo. That's one of the new buys in the last few months. So go take a look at that. Number 2 will be JP Morgan Large Cap Growth, which is probably similar to what Fidelity Contra had. Large Cap Growth, it's up 25% for the year. And then we have American Century Focus Growth up 24% for the year. So again, those are, between parentheses, you have the symbols, you can look them up. And the top 10 holdings, that's what moved the fund. But then you can also see what's been the latest buys. And we'll help you, if you want to own any of those stocks, you always want to have the big money behind. All right, here we have the Fear and Greed Index. For today, we're pretty much in a greed area, but slightly from neutral. We're at 56 right now. Yesterday was neutral at 54. A month ago, we were in a fear mode. A week ago on a fear mode. A month ago, also in a fear mode. And a year ago, it was neutral. So right now, it's been between neutral and greed for a while. So we'll see how it plays out, but it's not telling us much what the market, we're not at any extreme. Usually when we're here, it's time to pretty much take profits. And when we're here, it's time to start looking at the other side of buying. So we're in the middle, so it's hard to make any decisions based on that. And again, there are secondary indicators, so that's how it should be viewed anyways. Here's another secondary indicator. This is a bull and bear report. I notice here the bulls have been declining pretty much since the high that we made in July, right here, and there's less, people getting bullish, so that could be good into the end of the year when you see this fear coming into the market, where the bears are starting to creep up a little bit and the bulls starting to decrease. So again, it's a contrary indicator. Typically works best at picking lows when they cross each other, like here or here. So you see the markets at an inflection point, typically putting a low. Here we have the stocks with the RS at new high. That means the relative strength line is at new high. That means they're stronger than the S&P 500, these stocks. So here are the top 10 today. And we had Atma, which I believe is number 1 on the IBD 50. Carvana, the online car sales. It's an RS line of 99. And then we have the rest, TLN, Make My Trip, PI, Palantir, Shark Ninja, and the rest. You can see that there are 10 names here. So I pick one for you guys that's within buying range, that's actionable, that's not too stretched, that you can make money. Remember, it's all about trying to help you to make money here. So here's your weekly chart of Carvana, symbol CVNA. It's a retail auto company based in Tempe, Arizona. Sales are up. The up and down volume is at 1.5. That means under accumulation. And the group rank is number 68. Here's your RS line trending up. It's been strong pretty much for the whole year. Since the year started, we've been in a nice uptrend. I drew the trend lines, the upper and the lower. What you want to do is, buy as it goes on strength. And then on support, you can buy. I actually prefer buy on support, sell at the trend line, upper trend line, buy at support, sell at the trend line. And right now we're close to the support area as of last week, and we're breaking above this downward trend line. So that's good. It's still actionable. In this case, you want to refer to your daily and hourly chart for a better, proper entry point. But you get the big picture. It's trending up, and ideally, again, you want to buy at support, which is the lower trend line. Here we go to the top 10 Can Slim stocks here today. We had ADMA Biologics, it's a biotech, 324%, triple digit. Harrow, 265%. Seda Holdings, Global Holdings, 231%. Cava Restaurant, up 202%. That's being one of the leading stocks. NVIDIA is up 139%. Oscar Health, worth noting that chart today for a watch list, up 148%. Copperton Technologies up 111%. Transmedics, TMDX, 103%. Procept Biorobotics, 99%. And Spotify up 83% for the year. So I picked one that's actionable, will be PRCT, Procept Biorobotics. So let's look at that weekly chart. And it's a medical system equipment company based in San Jose, California. Sales are up the last few quarters, and up and down volume is 1.4, and the group rank is number 40. So it has a lot of good technicals going on and fundamentals. Breaks out of this cup shape formation of at least a year and a half length. And since then, pretty much since the beginning of the year, it's been trending up. I like this formation now after a big breakout 7 weeks ago. It's a symmetrical triangle. So if it breaks above range, which is about 83, 84 bucks, and it holds the 80 level or so, that will be your stop around 79. I like to get it, actually, if you can get a support at 77 and reverses out of that, that would be even better. But if you buy here, you want to put a low at this week's low or last week's low. Here's your best IPO and IBD 50 price percentage change today. On the left side, we have the IPOs. What you look for is a price percentage action, at least 3% or more, and the volume percentage change at least 40% or more. So we have on the left side, IBEX up 3.2% and 172% on volume, above average. So that's good. So that will be our stock for the day. You also want to take a look at Duolingo, up 3%, 3.2%, and volume was up 85%. So that's another one that caught my eye. And then you got Oscar Health, which I mentioned. Not much on the volume side, but good move on the price side. You also have Cava, keeps moving higher and lower volume now. So, but still stock of interest if you want to buy on support on a pullback to a moving average, that should be on your watch list. As far as the IBD 50s, we don't have much today. Everything is on lower volume, and except a few, price was up 3 or 4%, but there was no volume behind, except our Atma, which is the one that's best performing on the IBD 50s. It was up 3.3% and 73% on volume, but it's way stretched right now. It's out of place to be bought. So again, let's look at IBEX. This is a company based in Washington, computer software technology, very profitable, 1.6 up and down volume. That means it's been accumulated. And the group rank is number 62. So here's your weekly chart. I'm going out of this base right here. He broke down last week on big price and volume and had a follow through this week. I like to see a 3-week tie formation. We have 2 weeks so far. And as long as we trade about 1920, it's good. So P wise is P ratio, it's below market. So that's, a positive, if you will, that it matters that much for us growth investors, but it's always good to know you don't buy something that has a huge price to earnings ratio. It's turning, this could be a big cap shape formation, turning the corner. So we'll see how it does, but it looks to me that it's at an area where you can put on your watch list and try to find an entry point. Here we had the top 10 S&P 500, NASDAQ 100, and Russell 2000 best performers here today. And the rest on the left side, actually, S&P 500, NVIDIA up 139%. Vistra Corp is number one, is up 141%. GE Aerospace up 83%. Just gonna mention the top three. The NASDAQ 100, we have again also NVIDIA up 139%. ARM Holdings, which is another semiconductor, this one is based in the UK, 102%. And Constellation Energy up 74%. Here on the Russell 2000 at the bottom, we had this Summit Therapeutics, which is a biotech company, 844% year to date. I would love to have that one from January 2nd. Number two is AST Space Mobile, up 481%. And number three is IBD Biosciences, which is another biotech, symbol RNA, 386%. All of the Russell 2000 top 10 are triple-digit performers. But again, mostly are biotech companies with no sales and earnings, so be aware of that. If you're going to play those, you have to be really quick on the trigger in the way out, especially if you're wrong, and in the way in, hopefully get the right point so you can profit from it. Again, out of these 30 stocks, I picked one that's actionable, so that was DoorDash, symbol DASH. Here's your weekly chart of DoorDash, retail internet company based in San Francisco, California. Sales are up and down volume 1.1, and group rank is number 60. Here we have a nice round shape base. This could be a cap with handle if you look from, the highs of December 2021, and we're basically at the handle right now. But if you narrow down, this is a pullback to 200-day moving average. 6-7 weeks ago, we had a big move up on price and volume here. Now I'm seeing what we can call that a flat base of 6-7 weeks. So pay attention to this. Refer to your daily and hourly chart because this could burst anytime to the upside. And I would say if he breaks the 200-day, which is around 119, all bets are off. And if he breaks about 134, 35, that means a breakout and that could be actionable. Here are the world market and international ETFs today. On the left side, we have, this is as of Friday's close. NASDAQ was up 18%, S&P as well, up 18%. Europe as a whole is up 10%. And then we have emerging markets, which is Brazil, India, some parts of China, South Korea, that's up 8%. Then you have IFA, which is Europe, US, Japan, 10% as a whole. And you have the best stock market right now in the world. One of the best, I would say the best. It's Argentina up 37%. Remember, we have a new president there that's pro-business, so that's helping markets and their stocks. Also, India is up 19%. A lot of Indian stocks doing really well. And, based on that, ETF INDA is up 19%. That's India. As far as 22 developed markets gained 1.5% on average during last week. 12 markets are in a confirmed uptrend, including 8 in an uptrend under pressure, and 10 markets are in a rally attempt. So all in all, the big picture of the world right now looks pretty good. I think tomorrow you have Japan and UK doing something on interest rates. So we'll see if, last time Japan raised rates a quarter point, you remember what happened on August 5th? That was not very welcome by the world. So we'll see what they do this time, since we lower rates. All right, here we have the top 10 global leaders. And these are all foreign companies, the best leaders right now in the world. I went through all of them. And like I said, we have a couple of India companies right now, since it's doing well. Israel, 2 companies. Bermuda, 2 companies. And Ireland, I believe, is also 2. So let's take a look at Infosys. It's a computer software technology company, obviously based in India. Here's your weekly chart. And it's very profitable with an up and down volume of 1.6 and a group rank of number 62. So here's your weekly chart, another big cap shape formation. We can look at this as the handle. If you narrow down, you have a cap shape formation broke out, and you have a 4 weeks tight action for the last, here since the breakout. And the volume is a little higher than the prior weeks, but it's still below average. So keep an eye on this one. It's in a strong market like India. And so if you put it on your watch list, narrow it down to your daily and hourly charts, you can pick a proper entry point when this thing, if it breaks 21, I would say bets are off. If it goes above 23.5 or so, that will be a good breakout. So again, watch list name for now. Here are the leading IPOs today. These are the new issues. So these are the top 10. And I have them by symbol, the day they went public, the industry group, and the leader and the writer. So I went through all these names. There's a couple that are looking okay. Reddit is starting to turn a corner. Paxos looking good. Lower, we talked about that one 2 weeks ago. TRBB is also interesting. But I picked one for you today, Landbridge, symbol LB, oil and gas US Explorer company, underwriter by Goldman Sachs, went public on June 28th this year at 17, and it's currently trading at $38 almost, and it's up 123% year to date and since it went public. So here's your weekly chart of LB. Notice, that uptrend is forming a base now. Needs a little bit more time, but it came and found support at the 10-week line and the top of the prior base, which is around $32. So I'll give it a little more time. Typically, bases need 6 to 7 weeks. We are on week number 5 right now. So again, this is good for your watch list. And this company is based in Houston, Texas. It's an oil and gas, very, very profitable, a 2.0 up and down volume. And group rank is not very strong. It's 154, but it's getting better every week. So that's it's getting better from prior weeks, I would say. So it's a good sign for now. But technically looks strong. And again, keep it on your watch list and see how this base is being built. All right, Here's the educational topic of the day. What is position trading investing? Pretty much position trading investing is what I do, so that's what I want to talk about it today. If you're going to see that on my portfolio later on, and for you, all of you that have been coming to my meetings for a long time, you see that I don't do much trading, just very little, if any at all. So you aim at quarterly income, basically. You can adjust it once a quarter. I tend to do a little more than that. The style is technical analysis of weekly charts and daily charts, mainly weekly charts. You can see that of, my presentations, I always show the weekly charts. The holding time is 3 to 6 months. The time investing is a few hours each week. So pretty much you can do all your homework on the weekends. I tend to send every week on Saturdays at 8 a.m. Pacific Standard Time my weekly report with the stocks that have been moving that week and some ideas that I put, at the bottom. I give you the industry groups, the secondary indicators, the fear and greed index, and what the markets in general is doing. So basically, in one slide, you have everything to do your homework there if you want to be a position trader. The turnover rate is 2 to 6 trades per quarter. I do a little bit more than that, but I'm going to try to keep it to that. Commission costs very low. Of course, there is no commissions now, and some stocks, they, especially on Bitcoin, some of them they charge you commissions, so be aware of that. And the expected annual return is 25 to 35% a year. So I'm within that parameter. So that's pretty much what a position trader does. All right, moving on to the trending news and your money. This is an area where we discuss what's going on in the world and everything that's related with you and your money. So let's start with the asset class performers year to date. We have Bitcoin still in the lead, up 30% for the year. Silver is getting up there, up 28% year to date. Gold is up 25%. Gold and silver had a nice move today off the Fed news, and then they reverse as well. So we're going to see how that plays out. The total stock market is up 18%, symbol VTI. Copper up 12%. Spider real estate up 11%. We might see a little more move in real estate now since interest rates are coming down. We'll see. TLT, iShares 20 years plus up 2%. It's been negative all year long. Now it's starting to turn positive. Typically, when they cut rates, it helps to the price of the bond to go up. And oil has been the laggard now, up 1% for the year. Remember, we started the year with the oil prices at one point, they were up 30% for the year. So it's calmed down a lot. Here's the quote of the day. The greatest wealth is having a healthy body, a peaceful mind, and the right people in your life. I really live by that. I try to preach that every day in my life and exercise that every day in my life. So keep that in mind. It's a good way to have a good life. Do you have money regrets, anyone? So this is, I got this from IBD newspaper on over the weekend. Some financial regrets. Nearly 80% of Americans say they have financial regret. And more than 20% with a regret say they started saving for retirement too late. Another 18% regret not having enough savings for emergencies. So here we have the chart. Not saving for retirement early, most of people. Not saving for emergencies, about 18%. Taking too much credit debt, about 14%. Too much student loan debt, about 6%. And not saving enough for kid education, about 4%. So those are the regrets most people have. All right, here we have the S&P 500 performance 6 months before and 12 months after first Fed rate cut. So basically, what we're seeing here is that, let me see here. when they cut rates 25 basis points, the markets, the initial cut is 25. The markets are generally positive. When they do 50 basis points, the cut, it's 50 basis points cut, it's more challenged oftenly. So here is your blue lines. You see that's going down, and here's your red line. So you think the market trends to go higher. So we'll see how it plays out. This is done since 1995 till now, till 2019. So we'll see how it plays out. But they got 50 basis points today, and they were, like I said, they were dovish on their comments, and there was the first rate cut in the last 2.5 years. So the last time the last time they cut rates was 2.5 years ago. And so we'll see how it plays out, this rate cut cycle. But again, it's also a weak sign for the economy. So when you cut rates, just be aware of that. So moving on to the mortgage rates and treasury rates, talking about rates. The 30-year mortgage rate is 6.15. The 15-year fixed mortgage rate is 5.65. That's the one I would prefer to use. If you buy a house, you pay more of your equity versus the first 15 years. When you use the 30-year, is mostly interest. As far as the treasury rates, the 10-year treasury rate, which is what the Fed looks at, and that's why they're behind the curve. Right now, they're at 4.75, and the 10-year note is at 3.70. So I'm going to be watching how this plays out since they cut rates. If this starts going higher, that's not going to be good for the markets because they're cutting rates, and this 10-year treasury note going higher typically will play against of what they're trying to do, which is stimulate the economy. All right, here we have the earnings and economics reports the rest of this week. Initial counting job claims tomorrow at 8:30. That will be 5:30 here in California. Existing home sales also tomorrow at 7 a.m. California time. And then on Friday, we have the Fed rate decision in Japan and in, I believe, in England. So we'll see how these news affect our markets, see what Japan does. Hopefully they will do nothing or maybe cut rates, because last time, like I said, they increased rate by a quarter point in August 5th. That took a hit on the global market. So not sure if what they're going to do now. As far as the earnings, we have Lennar tomorrow after the market closes, and Federal Express. So those are two names. We're in the slow part of the earnings season, but those are two companies. Lennar, especially with interest rates going down, see what they have to say, and FedEx, see what they have to say about the upcoming holidays. Here we have the leaderboard by Investors Business Daily. This is a paying service, about $700 a year. They do all the homework for you if you don't have time to look at stocks and analyzing fundamentally and technically. So currently they have on their list about 18 names. Not much technology. I think it's only 2 technology names. So they're starting to move away from technology and everything. I think they have NVIDIA and maybe Meta. That would be the other tech. The rest, maybe, yeah, ServiceNow, another one. So maybe 3. Again, out of these 18 names put on by leaderboard, I pick one that's still actionable, if you will. So let's look at the weekly chart of Wing. This is a restaurant based in Edison, Texas. Sales are up, and the pre-tax margin is very strong. Typically, if you don't have a good ROE, return on equity of 18 or more, you look at the pre-tax margin. If it's 17 or more, it's also could be replaced from the ROE. So it has a good pre-tax margin, 1.1 up and down volume, and the group rank and not so good is 122. So here's your weekly chart, trending up since the breakout in November last year, and nice uptrend, pull back to the 200-day moving average, hold, and now we're breaking above this downward trend line. So worth to keep an eye on it. RS line is trending up, and volume starting to pick up on the right side. So again, watch list for now. Keep an eye on your daily and hourly chart. Here's another paying service by Investors Business Daily, Swing Trader. Here we have about 9 or 10 names on the list currently. This one is run by pretty much Mike Webster, Justin Nielsen, all the guys that you see in IBD Live. They all help to build this list. They're including the position size. So right now, they have a lot of ETFs, I believe, QLD, XHB, Argentina Index, and SSO, which is the leverage S&P 500 twice. So currently I have about half of the holdings is ETFs. So I pick one that is ETF also, and the Argentina Global Index, symbol ARGT. Like I was saying before, we have a new president there that's doing a good job by reducing the expenditure in the government, and that's helping the economy a lot by cutting all the costs that government costs usually. It comes out of a nice cup shape formation. This is your daily chart, since it's a swing trade, and I would see if we can come and test this area around 66 bucks and reverse out of there, and then maybe make another leg up. So for now, I say it's a watch list name. Keep an eye on it. Here's your RS line, and this move is being done on volume and price, so that's a good sign. Again, this is the Argentinian ETF, so it's not sales or earnings or anything. But a lot of the stocks are mainly banks and construction names, and they're all doing pretty well, and some oil names. So you have those three industries doing pretty well over there, and also they're doing okay here. So it goes in conjunction. And also, I believe the beginning of a cut rate here is going to help them even more. So again, keep an eye on this chart because it looks to me very bullish. All right, let's move on to the 10 ideas within buying range now. So these are 10 stocks that are still actionable, if you will. STX is one, EVR, AFRM, GE Healthcare, Uber, SC, Reddit, MTH, Home Builder, VRT, and XBI, that's the ETF of the day. That's a small cap biotech. Should do all right if they start cutting rates. Typically, biotech companies need a lot of cheap money to grow. And so this could be one of the beneficiaries of the rate cuts. So out of these 10 names, again, I pick one, and happen to be Uber this time. It's turning the corner, as I will call this. This is a cap shape formation. That's the shakeout in August. And now it's been holding pretty tight for the last 6 weeks or so above the 50-day or 10-week line, 40-week line as well. So it's been in this trading range very tight, around 70, between 68 and 75 or so. So worth noting, put on your watch list for now. Always refer to your daily and hourly chart for a proper entry point. But this stock was a leading stock most of the beginning of the year for the first 3 months, and that's correcting for the last 6-7 months. And again, Uber is a leisure service company. We'll know what they do. It's based in San Francisco, California. They're profitable, and the group rank is number 108. So it's improving by the week. So worth keeping an eye. It's a big holding for a lot of institutions. So that's what I like about it. It's part of the S&P 500. So if we're going to have a year-end rally, I believe this one is starting to move and perhaps end the year at new highs. All right, here are all the ideas and charts selected tonight. If you missed us the beginning or part of the meeting, or if you were driving, I'm going to read the tickers for you. Number 1 is CVNA. Number 2 is PRCT. Number 3, DASH. Number 4, INFI. Number 5, WING. Number 6, ARGT. Number 7, Uber. Number 8, IBEX. And number 9, LB. So here are my holdings and percentage invested. Right now, I'm in the market 65%. I'm waiting and see how this plays out. I'm done nothing with NVIDIA, 5%. I've been holding that for a while. I'm up over 100% still on that position. I added on last Wednesday 5% on the triple Qs on that move of that reversal we had. I also bought the leverage 10% on SSO and I sold it today. Didn't like what I saw on the actions, so I got out of the leverages and still up 35% on spiders and still holding that for a while. My return here today is about 36.5% and pretty much traded the SSO of that reversal last Wednesday and added 5% on triple Qs. As far as NVIDIA goes, let's look at the weekly chart here. The weekly chart is, to me, looks bullish, still an uptrend. I see the symmetrical triangle. Now, when we look at the daily chart, somebody could argue that, again, this is more an art than a science. I see a head and shoulders formation here, which is bearish. And if we break below the curving down 50-day moving average, which is already below that, and the only good thing is the volume is below average, I still give it the benefit of the doubt. I'm going to hold this into that 91 area. If it breaks below that or the 200-day, I'm going to be selling that 5% left that I have. I'm hoping I'm wrong on this daily chart, and this is going to do this and trend up from here into the end of the year. But again, you cannot live on hope when you trade. So you got to trade on what you see, not of what you think or feel. So for now, I'm going to be holding that until, like I said, around that 97, 98 area. All right, next virtual meetup again, it's going to be in 2 weeks, October 2nd, same place, same time. If you like to use my services, $180 for an hour consultation, help you out, make decisions on your sells or buys. I do also 30 minutes for $100. I use Zoom, and you can follow me again at Twitter at Alex Marenco 1. And here we have our panelists tonight. Steve Sweats, counseling full-time investor and national popular presenter, who will be presenting on September 28th, which I will be there as well. He's from Mississippi, the hospitality state. So how you doing, Steve?
I'm doing great, Alex.
Good to have you, my friend.
I'm excited about having you in San Francisco next weekend. That's going to be great.
That will be a lot of fun. Hopefully some folks can join us there.
Yeah.
And, let me see. I'm gonna try to
share it.
I'm gonna give you share the screen with you and make you co-host, right?
Right. Yeah.
Good.
All right.
So
yeah, here we go.
How you been handling this market? I mean,
well,
it's tough.
it's always tricky to me. Let's see. Yeah, it's been but
Here we go.
Here's the NASDAQ. And it has been tricky. And I did get a little bit worried I guess a couple of weeks ago, because we've had ever since the this October low, we've had a series of higher highs and higher lows on the weekly chart.
Mm-hmm.
And the 30-week moving average and the 40-week moving average have done a good job of keeping, providing support to this uptrend, to this, I guess, bull market. And for the, I guess maybe a couple of months ago was that first time we had some kind of change in behavior where the pullback was sharper. It had more volume compared to the pullbacks in the past. And then the rally after this sharp pullback, luckily it still found support at the 40-week moving average and 30-week moving average. But when the rally happened, it happened on less volume. So we're starting to see a change of behavior. Now, that to me, that didn't necessarily mean like, oh no, we're in trouble, a bear market's getting ready to happen. And I was talking to actually to Paulie about this maybe a couple weeks ago. I said I just think it looks more like a market that we rally and maybe we go sideways. Maybe we go sideways between these levels right here and just bounce up and down, that kind of thing. And just giving stocks a chance to build long bases to hopefully break out from, and then we get a whole nother leg up to this bull market. And so I just think that maybe that we're just getting, we're just going to get into a sideways type of market. We're going to have great moves up, great moves down, but we're just going to be maybe contained in this area right here. And who knows how long it'll last, but that's just kind of the way I see things right now. Now, having said that, for me, all I'm doing is, and I think a couple of weeks ago I mentioned SMAR. I mentioned that they were coming out with earnings, and that would be one I'd be looking to get into on a strong breakout above 50, which is right there. And you can see this nice kind of cup here and move up here and kind of a handle here and then another handle here, couple handles. And finally, we did get the earnings. But what was tricky about this stock was that I don't know what happened during the day, but earnings were supposed to come out after this bar right here. But I don't know if news came out or what, but this market, I mean, SM Smart Sheet, it just went crazy during this day. Let me see if I think a 30-minute chart was, yeah. Look what happened on this day. It's just, near the end of the day or middle of the day, and you get this crazy bar, and it takes Smart Sheet above 50. Well, what I ended up doing was I bought just a 5% position because I says, well, we got earnings coming out, but this kind of action made me think that they kind of knew something. So I ended up buying like a small position, real small, because I didn't want to go 10% because, hey, we got earnings coming out. I don't want to buy a full position before an earnings report. That's suicide for me. About, a 5% position, if the earnings gap was 20%, it'd only be a 1% drawdown to my whole portfolio. That's not bad. So I just went with 5%. And then, sure enough, it did gap up the next day, and then it pulled back. And when it pulled back, like here, look how low the volume was on the pullback. That's exactly the type of volume. I know I've said this a million times, but it's so true. That's exactly the type of volume that you want to look for on pullbacks. You don't want to see institutions dumping the stock. You want to see just normal profit taking that happens anytime a stock makes a move from $45 up to $54 in 2 days. It'd be normal to see some kind of profit taking, and so that just seems to be what was happening right here. So seeing that, and when it broke above these highs right here, I went with another 5% position. So I got another, and I've got a stop below the whole position at right under here. So about 1% under here. So that pretty much makes me break even here, and I would lose money on this position. Now it's pullback, but again, here it goes. It shoots up with a pickup in volume, and as it pulls back on decreasing volume. So as long as I see that normal behavior, Mike Webster always talks about abnormal, normal. What, I've heard Alex talk about it. Abnormal, normal. Look for, if you get something weird, you all of a sudden you get, strong volume on the downside. Well, that's not, if you've got a leader or a stock that's you want to perform well, it's not normal to see big volume breaking, a stock, with wide range down bars and big volume. You just don't want to see that kind of action on a stock that you own. If you do, that's a warning sign. But so far, each pullback is happening in a normal manner. Every rally is happening in a normal manner. I mean, you want to see volume pick up as the stock rallies, and you want to see the stock make new highs on this rally. I don't like this close here because that's looks like there's some stalling, but the volume quickly decreased over the next couple of days, so that doesn't look so bad anymore. Now I do need to see the stock to start to turn back up. If it continues to fall, especially if the market goes up, that's not going to be good. I'll have to get out of the stock. Another stock that I've had, and I really haven't made any money on it, and that's another thing I'm doing. These stocks that we're showing right now, these are my weaker stocks, and these are the first stocks when there's trouble. These are the stocks that are going to be the first one that I'm going to kick out because and that's kind of how William O'Neill did it. He wanted to force feed his leaders and pull money out of his laggards. And for me, Monday is another laggard. And I got this stock back here, around here. But look, I've had this stock for 1, 2, 3, 4, 5, going on 6 weeks. I think I'm up like 3%. I mean, it's if it's a leader, it shouldn't be doing all this up, down, back up. I mean, it's not going anywhere. And the volume, look at this volume. Every time it rallies, it's just not strong volume. And that's and maybe what it needs to happen is it just needs to form like maybe a flat base or maybe a cup and handle type of base. And maybe that's what it's doing here before it can go again. But here's another one where, hey, if it gets back down to here, I'm out. I'm going to be out of the stock. And in fact, if it starts breaking this 21-day exponential moving average and actually closing below it, and I'm down, like it's below 250 and I'm down on the position, I've had this thing for, a month and a half. I've got, I'm just going to get rid of it. I want, because I'm going to use that money and I'm going to plow it into some of my better performing stocks. So that's just what I'm trying to do right now. And I'm kind of like Alex. I'm a position trader. I really don't make that many decisions. Oh, I do some add-on positions, that kind of thing. But once I'm into a stock, I'm trying to hold it 8 weeks. That's really what I'm trying to do. And if it's one of my top performing stocks in 8 weeks, then I want to hold it 3, 4, 5, 6 months, maybe a year. Spotify, I've got that almost a year. I've had it for almost a year, and that's what I'm trying to do if I can. But these are some of my weaker stocks that aren't doing so well for me. Let's see. Peter asked me to kind of talk about my Shark Ninja and the trades I've made in this one. This one, I know we've talked about it in the past, but to me, this looked like a double bottom. And you can see that the second leg of the double bottom undercut this first leg. So that was very exciting to me. Now, normally, if earnings weren't coming out here, and maybe I should have bought a 5% position, but I didn't. Usually, once it breaks this low right here and starts heading back up and getting back up here, I'll start buying some because it's like a shakeout plus 3. We read that in first edition and second edition of How to Make Money in Stocks. And it's a Will Livermore thing, and I'll do that. I love buying shakeouts. I know Lee Tanner, he's another guy who loves to buy shakeouts. And so that's normally what I would do. But I didn't do that this time. I waited for the earnings report to come out. And so I ended up, getting, some up here. Now, look how this stock, look at that volume. Look how it explodes out of that base. That's the kind of action that we want to see in a stock that has the potential of being a true market leader. And that's what this has. It's got the great fundamentals, great sales growth, great earnings growth, accelerating earnings growth, accelerating sales growth. These are the kind of things that, we're looking for, and it's got it. And so this really, really calls my attention to this. Also, look at that relative strength line. Look how, as this market was correcting during this time, all Shark Ninja did was go sideways. That's great. I mean, that's exactly what you want to see. You want to see a stock that's resisting the general market, the weakness in the general market, because it tells you, you hear that analogy all the time about, a bear on the top of a ball that on top of water, and he's pushing that ball down, and he's doing it because the bear he's using all his might. But once that bear gets off that ball just shoots back up because the only thing that was holding that ball down was the bear. But once the bear goes away, then that ball shoots right back up. And that's kind of what we're seeing with Shark Ninja. As soon as the correction ended and the market started turning back up, then Shark Ninja was like a green light. And then when you had the earnings report coming out that was so strong, it just added more fuel to the fire. So it breaks out. Now, what's kind of beautiful about this is look how tight. I think Mike Webster calls this a shelf. For me, what I was doing and what I always like to do is that first pullback to the 21-day exponential moving average for these stocks that show that real strength on a breakout. I really want to use that to add to my position. So this one didn't quite get to the 21-day exponential moving average, but we did have Alex's buddy Gil Morales pocket pivot. Right there.
Yeah. Ralph DeSimone that talks about that too.
That's right, sure does.
So
and
he's gonna be there.
He'll be there. That's right, next week. And so what was so cool about this was, look at, again, you see me look at the same stuff over and over again. Look how low the volume was leading into that pocket pivot. So there wasn't any selling really going on. And the stock was just holding its position. And that's nice. I've heard Bill O'Neill say this. One of the most bullish things a stock can do is hold its gains. So we've got these strong gains right here. And look how well Shark Ninja is holding those gains. That's perfect. Beautiful action. Volume drying up. You get the pocket pivot. Wider range. I basically buy at the close of that day. I'm adding. I'm not initiating a position. I'm adding to my position because this is one of my stronger stocks. So I want to force feed. I want to add to that position. And I've still got it. Now, the reason I haven't tried to sell any yet is through all of this move up, look how well it's holding above this 21-day exponential moving average. When I see stocks hit that profit target and if they've hit that profit target and they have not violated the 21-day exponential moving average, then I want to hold it because I'm thinking, hey, this thing has got power. It's got the great fundamentals. And this is another thing. I look at three things when I'm looking at judging a stock, whether, do I need to take 20%, maybe try to maybe sell half 20% and maybe on a pullback, maybe trade around it, maybe on a pullback to the 21-day or something or 50-day, maybe add back into it, that kind of thing. The three things I look at are, obviously, the fundamentals of the stock. And I'm going to try to buy the best of the best all the time. So usually I've got that covered. I'm going to have a stock that's got the incredible sales growth, great earnings growth, the N factor, that good stuff. The second thing I look for is the price performance. Once it breaks out, how strong is that price performance? And I'm basically looking at two things. I'm looking at how well it holds above this 21-day exponential moving average. You can see how well it has. It's just done a great job. And the second thing is I just look at how the percentage gain this stock has had divided by the number of weeks I hold it. Because, compare apples to apples, if I've got a stock that's going up, say, 40%, but I've held it for 40 weeks, I'm just throwing out a hypothetical here. Well, my gain's only 1% a week. That's not that good. 3% is a good rule of thumb. But I've got a stock that I've only held for 10 weeks, and it's up 40%. They're both up 40%, but I've only held one for 10 weeks and the other one for 40 weeks. Well, the one that I've held for 10 weeks, that's 4% a week on average. That's a much stronger stock than the stock that I've held for 40 weeks, even though they both gained 40%. So that's kind of how I approach it. I'm just, take my price performance divided by the number of weeks that I hold it, and I look at how well that stock is holding above its 21-day exponential moving average. I've done some research on this years ago. I think Mike Webster's done some research on it as well, that leaders do a great job, especially in the first 8 weeks, of not violating that 21-day exponential moving average. So, and the third thing that I look for, and this one doesn't do doesn't work so well with this one, is I like to see stocks that are just coming out of either a Weinstein stage one, like accumulation phase, or it's in the early part of the stage of the Weinstein stage two uptrend. If it's early in that move, then that's another thing that another factor that I consider to help me decide. Okay, do I take half at 20%, or do I try to hold it for a bigger move? So in this case, I'll drink some water here. Well, in this case, yeah, it does seem like it's made a pretty good move from way back down here, but because because it's got such great fundamentals and it's doing such a good job of holding above this 21-day exponential moving average, and it's one of my better price performers based on how many weeks I've held it, I'm keeping it. And I'm just holding it. I'm not taking profits at 20-25%. I'm just going to hold it. And what I usually do is I just look at the weekly chart and just, use weekly lows to trail a stop. And like right here, you can use these weekly lows. Actually, that's what I'm doing on half my position. And so I'm just giving it a chance to go. And because it's one of my better stocks, I just don't want to sell it at 20-25%. And also, if it does continue to go and it does pull back to the 21-day exponential movements, we'll say next week or 2 weeks down the road, I'm going to use that to add onto my position again. Like a Monday or that smart sheet that it's not doing as well for me, I'll take money out of those stocks and I will plow it into this stock as long as it's coming back to the 21-day exponential moving average in a constructive manner. And what I mean by constructive manner, I mean, pullbacks with low volume. If it's a pullback with low volume, then I'm gonna be licking my chops and
So
looking.
Steve, I have a question for you. I know you like to have positions of about 15 to 20% max.
Yeah.
So if this name grows more than 15 to 20% on your portfolio, how would you be cutting it off a little bit, trimming, or would you let it run to be a bigger position than usual?
I'll let it run to be a bigger position as usual, but some of that kind of depends on how I'm doing for the year.
Right.
I get a little, I get a little bit more defensive if I'm not doing as well. But but yeah, for the most part, I do, and I've let positions grow up to 30%, 35%. That's happened to me before, and I'm okay with that. And I'm trying to learn. I'm trying to do like you did with NVIDIA, getting up to like a 40% position. I'm trying to do better at that. I'm still something I need to work on.
That's what Bill used to do in the old days, and I know Mike and Charles, they don't do that anymore. One, because the company at the time, after the 09, I believe, or 08, they cut us back to 25%. But in the old days, we can go up 100%, 120%, whatever we wanted in a stock. And that's where I learned from Bill. He was 130, 140 on Apple back in 05, 06. So I thought, well, if I'm 60, 70%, I'm good. I mean, that's half of what he's doing, right? Well, yeah, I grew up with that culture. So right now it's like 25% max. And I know you guys, you do 15, 20%.
Yeah.
So that's what I was asking, if he grows more than 20, what do you do,
Yeah, I let it run.
Just let it run, right? So
yeah.
that means you're right. And why not?
That's right.
Forfeit the right names, correct?
Exactly.
Another question I have is, you're a little concerned on the NASDAQ. When the NASDAQ's not acting well, do you look at the S&P as, okay, it is a brother index and so far it's okay? I mean, would you give it the benefit of a doubt, or do you say, well, I know that I need to cut back because the NASDAQ is not doing well?
Really, I kind of do how Mark Minervini does it. I start looking at just the individual stocks. And so if I see stocks like Shark Ninja, and I'll talk about some other ones too, if they're acting fine, then I'm thinking, well, yeah, that NASDAQ doesn't look so great, but no sell signals are triggering on any of my stocks. And I'm still finding other stocks that are like setting up that could be potential buys. So as long as I'm seeing that, then like you said, I give the benefit of the doubt actually to my stocks, how my stocks are performing, and how well I can find other stocks that are setting up that could be potential buys, if they break out. And so as long as that's happening, then I'll give more weight to that than I will the index. Let's see.
Okay.
Oh, and then another one. So I hope that answers, Peter. I hope that answers the question about.
Francisco made a good point. He says, as sharp ninjas in the New York Stock Exchange, so it's, it can be viewed as, S&P stock versus the Nasdaq stock, right? So
yeah, definitely, that's a good point. And it's kind of funny. I mean, Melly is
it's a Nasdaq.
I guess it's a Nasdaq and it's a technology, but really, my better performing stocks have not been, it's been like ON, a shoe company. Now App that's a technology company, but like here's Mercado Libre. Here's another one that it's acting like it should. It's finding support at its 21-day exponential moving average. It's, we've talked in the past how great the earnings and sales growth are. And but yeah, this is just, it was dicey here because this happened on that 1,000 point gap down in the Nasdaq, but it immediately recovered and it closed way up here. You wouldn't know that the Nasdaq was down 1,000 points just looking at Melly. And it's just, guys, look how strong. I mean, it's just like day after day, week after week, it follows through and it's holding that 21-day exponential moving average. Gave me a opportunity right there to add. And so that's kind of where, this one is. It's just they're holding that 21-day exponential moving average. And we're seeing they've got leadership qualities. Another one that, a recent one. Well,
let's go. Part of the S&P 500 also, I think so.
Yes, I think you're right. ON, another one where we got this, nice double bottom right here. And you got the undercut, you got the breakout right there. You could use this as a handle. Look how tight it got in here. And you can even draw a sloping trend line and it connects these 3 points right there. So there's all kind of opportunities, and that was earnings day right there. Of course, it's funny how it works out that way. You got all this convergence of all these lines, and that's the day the earnings come out. So it's like, oh man, why couldn't this converge, 2 weeks before the earnings came out? But anyway, earnings came out. I bought that day, added here on this tight breakout. This is another reason why I don't look at intraday action. And why I'm so glad I'm a position trader.
So Steve, a quick question on this one, since I know you're going to be covering this topic in San Francisco, but when you look at the monthly, we're encountering pretty much, the all-time highs, which were $55, $56, right? How do you, use the monthly chart in this case?
Well, in this case, what I do is, let me see if I can make this a little bit bigger. Yeah. Oh, made it too big. Hold on. Yeah, hold on. There we go. That's good, I think. What I'll do on monthly charts is some research I've done. I'm going to present it next week. Is that we've heard about Gil Morales' his pocket pivots. Looking at the volume, the actual previous 10 days. He looks at the previous 5 days too. He's another thing he looks at. But anyway, what I do is what my research has been showing is that if a stock has the highest monthly volume that it's had over the previous 5 months, it doesn't matter if it's a up month, down month, doesn't matter. It's very good. It's a stock that you need to be paying attention to. You need to really be looking for a base to form. And so you get that action here. You actually get it again here. That volume month was higher. Then you get it again here on this month. So you're seeing so much evidence on a monthly perspective that there's some serious accumulation going on in this stock. And when you see this, pay attention. This is a stock that has a chance of being a great leader. You'll see this in the presentation, but I went through a ton of leaders, past leaders, looking for this kind of characteristic. And you'll see it time and time again, that when you see these stocks show the highest volume over the past, a monthly volume over the past 5 months, the highest it's had, and it's got a strong close button, the top 50% on the range, then watch out. It's a great, great indication of a stock that has the ability to be a future true market leader. That's why that's another reason that's given me a lot of conviction to stick with ON because I've seen this. Now that one didn't meet the criteria, but 1, 2, 3. Yeah, I don't think that didn't either, but that did. And then we got the breakout. I think that's probably when a lot of us were buying the stock. And then you got now I actually didn't get it until I didn't get mine until 40. But I've seen this, and I've seen this, and I've seen this, and so I've seen so much evidence of major accumulation. And the thing about what's so great about these monthly charts, and we'll talk about that next week too, is that it's very hard. Institutions can't hide themselves on monthly charts. It's there. I mean, there's so much. And really, I think they're counting on us to not look at monthly charts. Like, everybody's a day trader now. We look at 5-minute charts, 30-minute charts, but who spends time looking at monthly charts? And it was interesting that when Mike Wester, I listened to him on IBD Live, and he talked about how Bill O'Neill would say, after they looked at a weekly chart, they pull up that monthly chart. Well, and they just want to kind of see where that chart, stock was in the grand scheme of things. But he would get Mike to look at that monthly chart when they're doing their, Sunday evening, sessions. And so I thought that was interesting too. So, but
Thank
we'll talk.
That small,
it's a teaser.
What you want to be talking for a while there.
Yeah.
I just wanted to get a little feeling of, how you deal with the approaching of the all-time high. And I like what you said that, the last 5 months, you see this volume and price action. That's a big tell of a, potential leader on,
Yep. There's one more tell too, but I'll share it next week.
Yeah. Let's it's a teaser, right?
That's right.
All right.
All right. So we got, ON. It's doing well. It's doing a great job holding above the 10-week moving average. Also holding above the 21-day. We get a dip here, but it never violates it. I mean, we never get a close below the 21-day exponential moving average. And if we did, we didn't see any kind of bars that went below the low of that bar. So I mean, we're just not. It's doing a good job. It's holding that support level, and it's and that's all I'm doing. And so I'm just holding things. I'm just not. I don't want to get cute. Try to sell a little bit here. I'm just trying to. If I've got leaders that I think I've got, I don't want to mess them up. I have done that so many times in the past, where I would have a leader and I try to outsmart the market, and all I did was cost myself money. If I would have just been patient and just held what I had, and not, take a little profit here, take a little profit. No, if I've got a leader, if I've got a stock that I think it's one of the best performers, that I've got to stick with it. And sure, there'll be stocks that I think were leaders. People who've listened to me here, there's like Enphase and Shockwave. You guys can remember some of the stocks that I thought were great leaders, and whatever reason, they just didn't pan out the way that I thought they would. But we got rules, breaking a 10-week moving average, those kinds of things. We got rules. We can use trailing stocks below weekly lows. So there are ways for us to get out of stocks and still make money. Just won't make as much money as we had hoped. But I'm willing to take that chance. And
So Steve, very good. So basically, it's 80% patience or 20% in and out, right? 10% entry, 20%. 10% out, and the rest is just patience, right?
Yeah, it really is. You're so right. And I'm telling you, it's tough. I know it is, especially because it's so easy for us to trade with our phones, iPads.
Sure.
Anybody get on a computer. It's so easy to make transactions. And but I just being patient, giving these stocks a chance to make moves, I just think that's a good way to go. And as far as some ideas,
we
Alex,
have a few here ideas that Francisco wants to know about.
Okay.
GEV, that name. G.
I'm sorry. What's the ticker symbol?
George Edward Victor.
Oh, GEV. Oh yeah. Yeah, it's a great one. I mean, if you got it, I'd keep it. Here's the area where it was really tight in this area right here. So, you can even done this. I mean, it's easy in hindsight, but yeah, you had an undercut right here. Nice upside reversal. I believe volume picked up. Yeah, volume picked up some, and you can maybe buy it somewhere around here. You could buy it here. There are opportunities. Maybe add here if you wanted to do something like that. I think now it's of course it's extended, but it's acting right. It's doing what Melly's doing and what those other stocks are doing. It's
Yeah.
acting like it should.
How
Look
about
at
NVIDIA and PI? Those are in the semiconductor industry a little more questionable right now.
Yeah, PI's. I like PI because of the volume, the persistent blue days, day after day after day. That's a good thing. I like the insider buying right here. I like to see that. Here's a stock making new highs, and what insiders are still willing to buy the stock. They must see really good days ahead for them to be able to put their own money into the stock while it's trading at these levels. But yeah, this is again the tightness is here. There's your entry. Now it's extended. They're all, these are extended now. You maybe buy it on a pullback to the 21-day exponential moving average. That'd be an opportunity. But definitely, I could definitely see it's got, the earnings are starting to pick up. The sales growth is picking up. Good numbers, going forward. Definitely a stock that, you can take a shot at. Nvidia's weaker now because, these other stocks we've looked at are all above the 50-day moving average, above the 21-day exponential moving average. And and I think Alex talked about this earlier, how that the slope of the 50-day moving average line is starting to kind of slope down now. It's starting to flatten out and come. We don't want that. We want that 50-day moving average to be sloping up. And so it's not
critical point right here, right?
Yeah, it really is. It needs to really get going. And it's just look, Nvidia's had such a great run. Maybe it just needs time to go sideways, kind of like what I was talking about with the Nasdaq.
The weekly looks different, right? Do you see the weekly a little more, I guess, bullish, if you will?
Let's see. Yeah, the one thing I like, well, the one problem I have, even with the weekly chart, is you're starting to finally kind of see that change of behavior where you're getting the bigger volume on the down weeks and the weak volume on the up weeks. So and then here it turns it down again, but when it turns down, volume picks up again. So it's like, oh man, it's the very opposite of what we're seeing back here. But it's just, I just think that kind of action just tells me it just needs to go sideways more. I don't think it means like it's getting ready to break or anything like that. Just go sideways.
All right, let's look at Cart, Uber, and Dash. Those are in the same industry, I believe.
Okay. Yeah, Cart is okay. The problem I've got, it's okay, but this sales growth, you guys probably heard me talk about this before. With me, all we got to do is hold 6 to 8 stocks. We don't really have to own that many. So I'm really particular on what I buy. And that means I do miss a lot of stocks. I do. But this sales growth is accelerating, which is good. That's not good. Next quarter, though, is good. Those numbers are good, but they're being revised downward. I just think that in the retail internets, Melly's your leader. I'd be finding ways to get into Melly instead of getting into, again, and this is what Bill O'Neill was a master at. He could take a group and he would know those top 1 or 2 stocks that are in that group. Well, in this group, in the retail internet group, to me, Melly is the leader in the group. It's the number 1 leader. And now you can say, well, Steve, you own it. I guess you would say that. Aren't you kind of biased? I said, well, just stack up Maple Bear to Melly. Look at the fundamentals. In Matthew Galgani's book, How to Make Money in Stocks Getting Started, he does that exercise with Expedia and Priceline. He puts like the earnings next to each other, the sales next to each other, liquidity, all the stuff, all the parameters that we look for in, Can Slim. And he measured the stocks and just put Melly up against Maple Bear. And I bet you'll see that Melly just, the numbers are so much better with Melly. The liquidity is better, the institutional sponsorship is better, the relative strength line is better, everything's better with Melly. So Melly is the stock that you ought to be getting. One quick thing I want to say that Scott Sinclair was so great about saying, people would call in IBD Live and they would bring up these other semiconductor stocks, and Scott would say, if you want to buy a semiconductor, just buy Nvidia. It's the clear leader. It's the leader. There is no the second, third, fourth stocks. They might be good. I don't doubt they'll go up 20-25%, but they're not Nvidia. Nvidia is the leader. So that's the one that, back when he was talking, when Nvidia was doing so well, that was the one that you had to put your money in. All these other semiconductor stocks, they might be all right, but it's just not going to be the leader. And
the difference between having Michael Jordan or a second tier player.
Oh,
right?
Will Purdue.
All right, let's talk about Duolingo and Spotify. I know you like Spotify.
Yeah.
How about Duolingo?
Let's see. We'll look at Duolingo. Duolingo, yeah. But and this is something to keep in mind, and this is what we cautioned about a month ago about. So it wasn't. Let's just talk about this real quick. We cautioned there were a lot of like this V type of action right here, and I said, watch out. Yep. Don't be buying stocks that come out of this V. Let it pull back. Let it tighten up. Let the volume dry up. And sure enough, we'll look at the NASDAQ did. All right, going back to Duolingo, this is too straight up. I mean, just straight up. Now, I think this is powerful right here, but I think it just needs time to pull back, to tighten up, for volume to dry up. Those kinds of things need to happen. And that just takes time. I think it's a stock that definitely, these earnings, my goodness, they're really good. These are the kind of numbers that we like to see. These are great numbers. Great numbers here. I wish the return on equity was better, but these are great numbers. And I suspect that return on equity will get better as the year goes on. So,
we need to go back first. It's 2B-ish, right?
Yeah, exactly. So I just think you can be patient on this one.
How about Netflix and First Solar? Those two are. First Solar especially had a big move lately. Any thoughts on that?
Well, my deal on Netflix is
Netflix first.
Yeah, it's making these highs, but look at the volume.
Yeah.
That's a strong. It's not. You're not seeing that real power from those institutions. Actually, me and DePauli talked about this stock 2 or 3 weeks ago, and she was asking me, I said, would you buy this breakout here? And I said no. I said no. After seeing this much volume on the way down, compared to this much the weakening volume on the way up, it's just not. These numbers are good, but it just that needs to change.
Okay. How about First Solar? We saw a change of character lately on it.
Yeah, this one's okay. I believe, we got earnings, I think, coming up October 20. That's still a little ways away. 41 days. Okay. That's a nice move. Yeah. This is nice, but it needs, first of all, it needs to tighten up. It really does. This and really, this is all forming in the lower half of this base right here, and I believe O'Neill talked about that as well. There's weakness if you're forming, underneath the halfway point of a base. You'd like to see some action up here, and maybe what needs to happen is go up here some, then form a handle, then. Yeah. That's when you buy it. And that's going to take time,
So as right now, it's a faulty base.
Right? Yeah, I think it is. It's too low in the base.
A couple more, HWM and GE.
Okay.
I believe they're in the same industry.
Yeah, it's a great stock. I don't have any. I wish I did. But this is a stock that if you have it, I don't see it doing anything wrong. It's holding its 10-week moving average. The 10-week moving average is sloping up. That's good. When it pulls back, it's not doing that pullback. That week had some increased volume, but it was below average on that week, and it found support at the 10-week moving average, which is good. So, if you, I don't know where whoever is asking about this stock, where you got it at.
Yeah.
Yeah, if you got it way back here, you could use the 10-week moving average as a trailing stop, that kind of thing, and just ride it. And yeah, treat it that way. I don't know as far as buying it. It's May. I mean, it's not really a base here. It's had several pullbacks to the 10-week moving average. The rule is in how to make money in stocks, you kind of want to buy the first or second pullback. But once you start buying the third, fourth, fifth pullback, you're really increasing your risk that you're going to get into a losing trade. So it seems to me that this is it's gone. It really needs to build like a longer base to reset itself before I'd get back into it.
Right. Okay.
Yeah.
Just last one then. How about GE? It's been acting really well. I know some of the IBDers own that.
Yeah.
Upstairs and a few other guys in there.
Yeah, this one is a struggle for me. I like that the RS line is making new highs right here. That's really nice. I like, this was tricky. I think I actually tried this stock and I took a loss in it, or I did. I know I didn't make any money. I think I tried it here and then I got stopped out the next day or week or something like that. This looked real tight to me, and then undercuts here. I could have bought it back and I didn't. Now it pulled back, and you could buy it right above there. The problem with this stock is I don't like buying breakouts after stocks have made such good moves and the volume's so weak. Look how weak that volume. It's not. It's like it's kind of going up. I don't know. I like to see more volume when it breaks out, and that's just not. It's not doing it. I was going to share something. It was on one of Alex's lists, and I think it was on his list. This is a stock. Another friend of mine brought it up earlier, and have been watching this stock too. But it's a utility stock. And you're thinking, oh my gosh, Steve, you're telling me about utility stocks. What are you thinking? I thought you were a Can Slim guy. Well, look at these earnings. Look at this earnings growth. This is incredible. And there is you talk about a new industry change. That's one of the news in how to make money in stocks. And you can hear the Ellison from Oracle. They're talking about all this investing they're doing into utilities. All this energy that we're using, electricity that we're using, the infrastructure, the utility or the electrical infrastructure needs some serious improvement. And so that's feeding into some of these utility companies.
Yeah.
So here you got a company here, little cup, little V shape, but look, now it's building maybe a handle. The volume is tightening, lightening up. And what I'd ideally like to see, I think that was about 22%. That was about 11% or something like that. I would love like maybe a 5 or 6% pullback, get tightened up here, see the volume come down here, and then break out. Put your stop down here, buy, I'll start buying around here if I see like a pocket pivot or something.
One of the best performers in the S&P and the Nasdaq this year.
Yeah. Yeah. Yep. It was on your list.
To see that reassurance always when they're doing well in the S&P. It's they're certified, recertified, and everybody knows them. So
yeah, exactly.
Money behind it for sure.
And one last one that I had I've had on my list is this stock right here. Now I've talked about you, but hold on, I want to say something about that before I leave. But this is another one that's just shown. Look how powerful that volume has been. And this is what's amazing. I'm going to hover my mouse over this. Look at that earnings surprise. 1,900. That's a pretty good earnings surprise. And look at the volume associated with that. So, I mean, this is a stock that's coming out of a long base. Incredible volume on this breakout. And what I'm just hoping is maybe a cup with a high handle, something like that will develop over the next couple weeks or so. And but I've got this one on my list. And what's funny about that was, we talked about you here maybe 2 weeks ago, maybe 4 weeks, 4 weeks ago. And it continues to go higher. And Kathy Donnelly was on the IBD Live last Friday, and she talked about you was her stock that she's looking at. So I said, aha, I feel good that her and I are on the same page. Unfortunately, we're still waiting for a base to form. I mean, that's what's some kind of frustrating. You see the stock and it's doing so well, and you're thinking, I'm not in it. Oh, man, I'm missing out. But you're really not, because eventually it will form a base. and you just got to be patient, wait for it, and when it does, and this is I think this is a great stock it's worthwhile to take a shot at, assuming the base forms in a constructive manner. But these are just some ideas I'm throwing out there for you guys to keep on y'all's watch list.
Yeah. Thank you, Steve, very much. Great coverage today, and we look forward to see you. I look forward to see you actually on the 28th and 29th in San Francisco, and
well,
catch up there. And
yes, definitely, it'd be
I know
great.
you're gonna talk about monthly charts. I'm gonna.
Oh yeah. I'm gonna bore you guys to death. What's so bad was they got me after lunch. So after you guys eat lunch and y'all get all sleepy and tired, everybody's gonna be snoring during my presentation.
All right. Well, I'll be there to always learn something new from you.
All right. Well,
Thank you again for joining us, everyone, and we'll see you in 2 weeks. Hopefully, some folks can join us there, and we can meet you all. And if not, we'll get you here again on October 2nd.
Yeah.
All right.
Sounds great.
Good night, everyone. Thank you, Steve. And bye for now.
See you, Alex. See you, everybody.
Take care.